Meantime, that rise in Treasury yields driving mortgage rates to multi-year highs, and that's had a big impact on home builders. Take a look at the moves lower this week in names like Lennar and D.R. Horton, but the Chartmaster says the sector may be due for a second look. Let's dive into those charts with Carter Worth of Worth Charting. Carter, what are you looking at?
You bet. I mean, sometimes you can just try something for a trade. As we know, it doesn't have to be a value call. It doesn't have to be a long-term call. And that was the point of the client note sent out yesterday evening, that home builders seem a bit extreme here, playing for a prospective bounce. Let's look at a couple charts. So this is an important one. This is the actual S&P 500 home builders sub-industry group as constructed by Standard & Poor's. And what we know is that, and you see the annotation, this huge new high, and then, of course, this 34% sell-off, which leaves us where? Right back at the prior peak when home builders peaked in 05. The irony is, of course, the interest rates on the 10-year were 5.25 in 05, and right now they're 2.7. The other irony is, of course, earnings are double, essentially, what they were in 05 and what they are now. And so fundamentals, are they cheaper then than now? I would think so. Are rates much more favorable, 2.7 than 5.25? I would think so. But either way, I think you can trade on the long side. So look at the next chart. This is the same thing. It's the sub-industry group, but it's over the past 10 years, 12 years since the 09 low, with the 150-day moving average. And we are basically as far below trend as we were on the COVID low. So again, another way to depict sort of an oversold condition. And then the here and now chart, this is the home builders just over the past 1 year. And finally, look at this chart, the next one, one way to draw the lines. It's a well-defined channel. You can see it there. Those are mathematically parallel lines. And we've come down to the penny, to the lower band. And I think here you can play for a bounce. And then finally, the vehicle, the table here, this is the way to do it. You could use the SPDR, the XHB, but the purest one here is the iShares ITB. It's down 12 of the past 14 weeks. Again, 30% sell-off at this point. And you're capturing a lot of themes. It's not just Pulte and Lennar and Toll, but you're getting Mohawk and Sherwin-Williams. You're getting Ethan Allen, Leggett Platt, Home Depot, and Lowe's. So we're thinking play for a bounce. It's a trade.
When the man says mathematically parallel, you listen. Carter, we'll see you on options action shortly. Carter Worth of Worth Charting. Jeff Mills, one home builder in particular catches your eye, I believe, as a trade.
Yeah, it's a name that I've mentioned before, and I like it just because the way it's situated in the market. But my guess is if you were to look at any number of home builders, it would look the same. But D.R. Horton is a name I looked into today. So it's 20% below its 200-day moving average. And to Carter's point, probably prime for a little bit of a pop. It's only been 20% below that 200-day twice in the last 20 years, once in 2011 and once in 2020. So in 2011, over the next 6 months, it was up 38%. It outpaced the S&P 500 by 23%, and you saw a similar pop and similar outperformance in 2020. And oh, by the way, it's trading at 4 times forward. So valuation, not a great timing tool, but there's definitely room above this stock for an oversold bounce.
So when I look at the home builders, I don't go back to the Great Recession. I go back to pre-pandemic. Mm-hmm. So in my idea of where the home builders should be is they should be below pre-pandemic. Rates are, to everything that Carter said, rates are moving higher than they were then. We're going into a recessionary environment. So I think while Carter says they're good for a trade, maybe, but I agree with Jeff on D.R. Horton as the only one that I would be investing in. Mm-hmm. They are spec builders, means they have supply. So everything that's hitting the market right now is they have no workers, they can't find supply issues, they have issues with lumber and everything else. This builder actually has the supply of homes already on the market because they're spec builders.